You think you need thousands of dollars to start investing? I'm here to tell you that's just not true. In the next few minutes, we're gonna walk through a safe, simple strategy to turn your first 500 bucks into a real financial foundation. Let's dive in.
So let's just tackle the big question right away, right? Is $500 really enough to make a difference? And the answer is absolutely yes. But here's the key. This isn't about some get-rich-quick scheme. It's about building a solid financial habit. And by the end of this, you're gonna have a clear, safe plan to do exactly that.
All right, so our first step is really just shifting our perspective. We're gonna move away from this myth that investing is some exclusive club for the wealthy and step right into the reality that, you know what? You can start building your financial future today.
It's so easy to think of your first investment as a lottery ticket, right? A single bet that could change everything. But that's not the goal here. Not at all. I want you to think of this as laying the very first brick in a solid foundation. You're not just investing money. You're actually building a system that's going to make your money work for you for years and years to come.
I absolutely love this metaphor of planting a seed because it's perfect. That $500, that's your seed. You plant it, and with small, consistent additions, like watering a plant, it has the potential to grow into something so much larger over time. It's all about starting small and thinking long-term.
Okay, enough theory. Let's get practical. To plant that seed, you're going to need the right soil. So where do you actually put your money to get the ball rolling?
That place is called a brokerage account. And don't worry, it's not nearly as complicated as it sounds. Seriously, just think of it like a bank account, but instead of only holding cash, it lets you buy and hold investments, things like stocks and funds. It's your personal gateway to the financial markets.
And the great news is, opening a brokerage account has never, ever been easier. As you can see here, there are a ton of trusted, really beginner-friendly options available in many countries. You just need to pick one, sign up online, and boom, you're one giant step closer to making your first investment.
Now that you have your account set up, it's time for the heart of our plan. This is your simple, actionable strategy for that first $500. Let's break it all down.
So this slide here shows the classic beginner's dilemma. On the left, you've got the risky approach, putting all your money into a single hot stock. Look, that's a huge gamble. It's speculation. On the right, we've got the smarter start, an index fund or an ETF. Instead of betting on just one company, you're buying a tiny piece of hundreds of them. It's like you're not just betting on a single horse, you're backing the entire race. That's investing.
So where do you start with that? Well, here are 3 incredibly popular ETFs that are fantastic for beginners. VOO tracks the S&P 500, so you get a stake in 500 of the biggest US companies. VTI is even broader. It covers the entire US stock market. And SCHD focuses on companies that consistently pay out dividends. The key here is broad diversification and super low costs, which is why these are such solid choices to build on.
So here it is, a simple, balanced plan for your 500 bucks. First, you're going to put $350 into a growth-focused ETF like VOO or VTI. Next, $100 goes into a high-yield savings account. This is just a safe spot for your money to earn a bit more interest than a regular savings account, and it gives you a cash cushion for emergencies. Finally, and this is so important, invest the last $50 in yourself. Buy a book, take an online course. This plan balances market growth with personal growth and financial safety.
Making that first investment, that's a huge step. But the real secret to building wealth isn't just one action. Nope. It's about creating habits that are going to last you a lifetime.
One of the most powerful strategies in all of investing is something called dollar cost averaging. I know, it sounds complex, but it's dead simple. You just invest a fixed amount of money on a regular schedule, say 50 bucks every month. This way, you avoid all the stress of trying to time the market. Sometimes you'll buy high, sometimes you'll buy low, but over time, it all averages out. It's a fantastic way to invest with discipline instead of emotion.
So why is being consistent so important? 2 words: compound interest. It is the engine of wealth creation. Just look at this. Investing just $500 a month could grow to over $85,000 in only 5 years, assuming an average market return. How? Because your initial investment earns returns, and then those returns start earning their own returns. It's this incredible snowball effect that can build serious wealth over time.
Now, to stay on this path, you have to learn to ignore the noise. There will always be get-rich-quick schemes promising you the moon. As you can see here, things like meme coins, day trading, and complex options. These are not a strategy for beginners.
A good rule of thumb, if it sounds way too good to be true, it probably is. Just stick to your simple long-term plan.
This quote just gets to the absolute heart of it. There's this huge misconception that investing should be exciting, like a casino. But in reality, successful long-term investing is often pretty boring. It's all about consistency and patience, not chasing the latest trend. The real winners are the ones who just stick to their plan year in and year out.
So there you have it. You've got the mindset, you've got the tools, and you have a clear plan for your first $500. You literally have everything you need to get started. The only thing left to do now is take that first step. So, what's yours going to be?